I always talk about consistency. It is really important in the trading, and that is what I'm going to show you very quickly, how consistent we were for the analysis of natural gas throughout whole month. And I'm going to show you a very short clip how we predicted natural gas, and then we're going to talk about more in the analysis part of this video. At this point, if you remember, I've said that I want to see a good pullback, which we have got now. Price made a new high. As you can see, it's consistently making higher highs right here, and that is another signal that price might push up from here and make another high. So that is all the part of process. When the price is pushing up, we will go long till where? Till the price is right here at the top of the recent high, and we will look for the possible double top trades. The body close above this high, then we will likely push up from here. So wait for that, wait and see if the price form a double top, and it will fall from here. If broken above this high, in that case we have a likely signal the price will then continue to push up and keep on making new higher highs. So we are still in an uptrend. As you can see, we have 1 and 2 and 3 touches, and let's say the price won't form a point D. We still have a chance that price will push up from here, looking at this nice trend. At this point, we are only looking at pullback entries bullish, and just I need to see a good pullback above 50 EMA, and a bullish engulfer will be my entry reason. Now for the trend continuation, I want to see a complete break and close above this high with the body. In that case, if we have that, I'm going to look for another pullback entry bullish and keep on riding up with the trend until the price reach to the next major level of resistance, which is quite far, which I'm going to mention in my upcoming videos. But if we have a rejection somewhere here at the first high, in that case we will have a double top pattern. But this is an area from where we can expect some good pullback that is enough to hit your targets. Price push down as mentioned and pulling back down. Now here we have 20 EMA. We have a possible chance that price hit 20 EMA and forms a bullish engulfer, or if we have a good push down above 50 EMA, that is also fine, and that is a likely chance the price will push down to 50 EMA, forms a bullish engulfer. So wherever I see a bullish engulfers above 50 EMA, a valid condition, I'm going to go long from here again till this recent high on this platform. If this candle closes as a bullish engulfing candle here on this platform, if we have this condition, that will be a valid signal here on this platform. And also looking at this trend line, if you look here, this trend acted as a level of support, resistance, and a support. So looking at this trend line, if we get a bullish engulfer and that is also above 50 EMA on this platform, we'll have a valid buy signal, and price will likely push up from here. At least 1 to 2 ATR will be your targets from where we can get another push up. Looking at this uptrend has started all the way from here. All we are expecting some pullbacks before the price is just making new higher highs. A big pullback, not breaking below this low, means we are still in an uptrend, and price made another high and we had another pullback. So what we can expect, another push up, pullback, and then a push back up. As long as we are in a nice uptrend, we are only looking for counter trades from the area of value, exit, and look for a trend continuation bullish trade above 50 EMA. So that's what I'm looking at. Awesome. So you see how nicely we've been predicting market every single day, every single move without any hesitation, because we have a set in stone rules. We did not get scared from the news out there, as I was also getting some messages that price is now gonna push lower. Lots of time I got this message from my friends and from the other traders that it is not gonna push high. But you see, I was confident, we were confident here. And I've been repeating that we are making higher highs and prices in an uptrend, and we are not looking for sell trade. Repeating that in almost every single video since the price hit our area of value. Since here, I've been mentioning that we are only expecting these breathers, but in the long term, we are still bullish. But we also took an opportunity to take an entry at these breathers. We entered here, right here. That was clearly mentioned in my video, and then we took our sell trade till here. Now, before that, we took this entry as well here on Owanda. If you look here, the trade alert was sent to my members already on that date. Since here, we were bullish and only looking for some pullbacks that is enough to hit our targets. Nice pullback from the zones, then push up, formed a double top pattern, bearish engulfer that was sent to my members as well. Right here, as you can see on your screens, that was sent to my members. That is what I want to teach you. We are not getting scared to take our trades, to take a risk, but a calculated risk. It is a risky business. That is why risk management is very important. But you see how nicely we had an edge over the market. We had losing trades as well, but overall we had winners, most winners than a loser. And not once I've said that we are completely bearish. We are only looking for bearish pullbacks. That is what I was explaining. All we are looking at are pullbacks that is enough to hit our targets before the price will push up. Every single video I've been saying that. And this is not something new for me, but it might be new for you because you guys are still learning. That is what I want you guys to learn and understand the system of a trend. And if you are under your risk capital, you won't be scared to take these trades because you know maximum it's going to hit your stop loss. Otherwise, if you have edge over the market, there will be more chances for the price to hit your take profit. Price finally broke above a level of major resistance we've been waiting for and started an uptrend and heading towards a major big levels. Now we had two levels before, and which is what I'm going to talk about in the analysis part of the video as usual. And as always, in the first part, let's talk some educational stuff. Now, if you want to skip this part of the video, you can see the timestamp linked in the timeline. But trust me, the first part is going to be really beneficial for you. You're going to learn tons of knowledge. You're going to learn how nicely we avoided the market noise, took some trades without any hesitation. And this was something I want to show you, that we had lots of noise in the market, but we were still bullish all the time looking at the trend. But I could be wrong, but having that edge is an advantage for us, that our prediction was going right most of the time. Now, in first part, I'm going to show you a few trades. We took some nice counter trend trade because mainly of the weekend I show you the pullback trades when the price is pushing up, making high highs. We entered at the pullback. That is what I was showing you above or below 50 EMA. But this week, I'm going to show you some counter trades we took in the priority group. I personally took when the price hit the level major zones, how nicely we took some nice profits following some nice and exact rules. So let's start with the second part of the video, starting with the counter trades, the trend continuation trades we took in the priority group. Now, trading should be simple, and that is what I try to teach you, and that is what I'm going to talk about in this part. Now, as you can see right here, the zones report was sent to the members on 29th last week, that we are now looking at the level of resistance where the price is now currently inside of, and here we are looking for a trade on smaller time frame. Now, here the good part is I'm going to show you a few trades I have taken on 1 hour time frame, and right here a good example of that. The zone was broken, and what happened if the zone is broken? It likely turns to be a level of resistance and likely push the price lower. Now that is what exactly we were waiting for, a trend continuation trades from this area. Now coming back to this zone, after the break the price started to push up and forms a nice double top pattern, and right here at the 382 candle I've entered, and that nicely hitting take profit of 1.421. And before that we also had this zone, nice double top, nicely hitting 1.421, and then price forms another double top above this area. That is why I took this trade, and then a price push down and then continued to push up. That is why very important to keep your stop loss and take profit both, and that's push down nicely more than 90 pips if you want to manage it, and how you manage it is totally up to you. A good example of entering in a trend continuation zone after the break with a pullback, with the rules, with the conditions. Right here, another good example of trend continuation trade, bearish from the area of value. Now exactly the same of the last trade. We have a broken below this zone, we had a pullback, and then price pulled back to the area of value, rejecting one, rejecting twice, where the sellers are telling us that now we are not going to push up from here by rejecting once and rejecting twice, that we have now taken over the buyers and now we're going to push the price lower. That is how we look at the price action. That is why it is called a price action, because price is giving us an action telling us that I've rejected once, rejected twice, and here I'll be likely falling down. If not, you have your stop loss there, your protection, but an edge over the market That is what we have used exactly. We've been prepared for that, and how nicely it pushed lower more than 200 pips. And it's totally up to you how you managed it. If you have exit your trade, that's totally fine. If you're still managing it, that is also fine. That is also cool. You can also use 50 or 20 EMA as your trailing stop if you want to manage your trade, but with a fixed target of 1.421, that easily hit your take profit without any confusions or any guesses for entering the trade. Everything was exactly with the rules. Then we have an interesting trade right here, USD Japanese yen. Lots of messages I was receiving. A news I was looking at in the market online that it is a risky trade you are taking. We already have one intervention from Japanese bank that they're buying their own currency, and that is going to happen again. That is very likely. But why shall I leave these 200 pips and just wait for the news candle to form and miss this opportunity when we have our all rules met? And what are the rules? When the market is trending, or we are looking at a trending trade, but only when the price action forms a condition. I did not enter here. Why is that? Because price action was not telling me to buy, even though that pushed up massively. But before that push up, you see this big wick of 75 pips. That would be enough loss and stress. That is why I did not enter. But what after that? When the price gave us a big push up, a massive push up, we had this bullish engulfing pattern showing that buyers now taken over, and it is a likely chance after this big pullback we're gonna see some good push up, good breather, at least till recent highs right here before the price will push down. But we were aligned with the ATR, and with the power of ATR, price hit the take profit of 196 pips, where we safely exit. Right here, the trade alert sent to the members. I've already informed them, gave them a heads up that be careful with the risk, because that trade is around 200 pips and you need to be very careful with the risk management. Otherwise, that could be enough to blow up your account if gone opposite. So nicely hitting the take profit, and we were not scared of entering this trade because we have our rules there. Our 6 rules are met, right? The one you are learning in the course. And if you are watching me here on YouTube, you know that once we have a good pullback followed by bullish engulfer and we are above 50 EMA, 20 EMA, we take our buy trades. Right here, I've already sent this report to my members that this is an area that I'll be entering my trend continuation buy trade. A zone sent to my members on 22nd of April. If you're still my member, you have received the zone. Now, we did not wait for the price to push down because of the news, but we were already prepared before the news even released. We had this zone here. That is how the technical traders trade. All these moves have happened because of us retail trader pushing the price down, algos pushing the price lower, retail traders pushing the price lower, all the fears, everything, people losing money, making money, and that is how the market moves. And that is where we need to be intelligent. We need to identify these zones, we need to identify the trends, we need to identify the price action. If we do all that, then trust me, your trading games will go much more higher if you are always trading in control of your psychology, in control of your emotions, in control of your risk management. Maximum, that would be a stop loss, but that wouldn't blow up your account if you're under your risk, and move ahead to the next trade. And how nicely this year has been so far till May, a winning streak, which I'm going to show hopefully in my next weekend's video. Right here, GBP CHF, the report sent to my members to look for a counter trades if the price hit your area of value and forms some sort of signal. Now, a zone report sent to the members on 15th of April. If you are my member at that time, you should have these zones set on your charts. Now, coming back, price hit the area of value right here and forms a nice bearish engulfer right here. The price was pushing up in a nice uptrend, broke above, pushed down, pull back up, and then hit a level where the trend will likely to bend and push down. Now, exactly, we were prepared from last couple of weeks. Right here, a major zone from where we were expecting a possible push down right here. And with the price action telling us, bears are telling us that I've now taken over the bias with this big bearish engulfing candle, and that nicely pushed the price lower, hitting 1.421 targets easily. And that is how the trading should be. Simple and easy. You need to know how to mark the zones as accurate as possible. Need to identify the trends. Make sure you're not panicking when you look at your losses, because that's a part of trading. So 3 trades we took this week, and all 3 were the winners in the priority group. And not to forget that trading is not all about winning. This is a trade I personally took, followed all my rules, formed a bearish engulfer, and that hit my stop loss. Let me show you the real trades I've took on my live account. Right here first, I've shown you the USD Japanese yen trade on the IC mark. Right here, my live account is connected, and one of my trades is running. Right here, as you can see, this little sign. And here is USD Japanese yen, the trade I personally took. Right here, exit. And how nicely the price pushed lower, hit my take profit in my real account. And then the GBP CHF trade I've just shown you. Right here, bearish engulfer, the one I've just shown you on the Oanda. That is how I take my trades. I do all my analysis on Oanda. Then I trade Forex on IC market. I do trade on Oanda as well. I have accounts with them as well. But here I took this trade on IC market, since I can connect IC market with TradingView, hitting my take profit nicely of 1.421 targets, and taking the trades in the real account, exactly the same method I try to teach you every single day. You see how nicely we pulled the money out of the market, not holding on with the trades. A very good example of this trade, not holding on, being greedy. That is why I always say, never marry your trades. It's just a date. Once your date is over, move ahead and look for the next one. And being greedy could be a break even, or could be even a loss right here, and then move ahead and look for next conditions. And also the good thing is, we were prepared before these news were happened. Before the FOMC was happened, we were in the trade already, and we were only looking for buy side, and we were not looking at the move that did not happen yet, and that we were not have a single idea what FOMC is going to do with the market. What if it pushes up? But here we had an idea that we are in an uptrend, we had a bullish signal, enter this trade and exit maybe before the FOMC has happened. And anyway, our target has been hit right here before the FOMC meeting, and I've already messaged my trader, informed my trader to exit their trades, as well as our targets were hit successfully. Then we have these 2 trades I sent in my public Telegram channel, that we are now approaching the level of major resistance, and we had a nice condition from where we can get a possible bounce or a pullback out of, and that also successfully hit targets, entered exactly at the pullback to the zone that was recently broken, entered with the bearish engulfer with the rules, and nicely hit our take profit according to my stops and targets rules. Then another one sent in my public Telegram channel as well, that we are now pulling back to the zone, a zone that was recently broken, as you can see on the screens, and after a good pullback we had a nice pin bar or a double bottom pattern, and that also pushed the price up nicely, hitting our take profit as well. Now let's add crypto in this video as well. I know it's going to be a long video, but trust me, I want to show you the potential of having a right strategy, having a right method of trading. It will work in every single market. So starting with crypto, I've been personally taking some trades in my live account with BitGet, and I've been taking some trades, as you can see right at the history of my last few trades. And I have my real account connected, as you can see my name, it's Money Markers, my channel name on it, and it's verified. So I want to show you how nicely I took some crypto trade using the exact method I've been trading. Right here on this altcoin INJ, I've been taking some nice trades. I have some best performing coin. I'm still taking the trades, I'm still testing, and I will also be uploading how I trade crypto in my MMTA full course for my student. And I will be making a separate lesson how I trade crypto, what factors I personally look at when I'm taking these entries. Everything will be there very soon. So exactly the same, a nice pullback entry below 50 EMA, hitting my take profit easily. Right here, pullback entry above 50 EMA, bullish trade opposite, hitting my take profit easily. Right here, Ethereum, nice bearish engulfer, hitting my stop loss easily. That's a part of trading. Then we had a bearish engulfer, hitting my take profit easily. Then a counter trade right here, still pushing up, still running. Do not take this trade. I have full rules, and the way I exit my trade, that's a different method. You need to learn properly before you take these trades. Then we have right here, this coin right here, push up nicely, and these are the trades I've been taking using the exact same strategy, but adding some extra rule which I'll be uploading in my course, because in every trade, in every different market, you have some certain rules you need to look at, and once your rules are checked, you take your trades without any guesses. So on that note, right here, if you are interested to learn full trading system, that is not expensive. To learn every single thing, to become a pro and to become profitable trader, that is why I show you every week that how nicely these strategies are performing till date. With that, standard plan is totally free. Standard Plan Plus will be free as well once it's fully launched. It is very important to have your mentor, because if you have a mentor, that will cut your long journey in half or even less than that, so that you don't have to go through all the struggles which your mentors has gone through when they were learning. So I have everything what I know, and I've been profitable with those strategy from years, and that is what I want to teach you right here in this plan. If not, that's totally cool. Make sure you hit the like button so that you receive any analysis like this and education content every single week. So with that being said, let's wrap the first part of the video. I know that's quite long. I hope you have learned something out of that, starting with our analysis with natural gas, gold, silver, and crude oil. So what do we have right here with natural gas? So after a while, after so many ups and downs moves, and finally we hit and break above the zones of natural gas, and we've been bullish from here right here. And I've said that if you're a long-term trader, if you are someone who want to hold, that is something you can keep a stop loss and take profit above this zone. If you follow me from last couple of months, that is what I've mentioned when the price hit this area. But for us, for our day traders, for our swing traders, we want to grab some good money with a good risk to reward ratio and carry on with the next trade. So what to expect from here? Let's see at capital.com. The zone is nicely broken. Now we have two zones. One minor that can react nicely as well, and one major right above. So first, looking at the zone below that is recently broken, and that will turn what? If you have seen the first part of the video, remember when the zone breaks, it will turn a bullish area. A resistance before will now turn support. At this point, we can now use a Fibonacci retracement, because now we are allowed to use that. This push up has triggered a Fibonacci entry as well. Now, if you follow me, you know how we use that. Now, from the top of this candle, and we're going to go down to the zone right here, the one that has been broken. The zone level is right here on this platform. In case you are brand new, is 2.002. that goes up to 2.153. Now this is the level from where we had some nice trades. Now we are broken above in a trend continuation. So now there are two type of entries you can look for. Actually, now it's going to be three type of entries. Number one, aggressive entry. That will be a Fibonacci entry at 50% retracement. Now for the aggressive traders, that can be your buy limit order. Once the price pull back, that can be your entry triggered and the price will push up. Take profit 1 can be 1 ATR, or take profit 2 can be 786 retracement. Take profit 3 can be 1.618 retracement. So that is how we use Fibonacci retracement for our entries. Stop loss can be below this pattern. So that is a way of entering aggressively. Less aggressive way, just a normal pullback. If you remember, my pullback entry can be above 50 EMA. It can be here as well. Once we have a pullback followed by bullish engulfer, that will be your pullback entry bullish, which is not an aggressive entry, because then we have a signal of a bullish engulfer telling us that we have a bias taken over, and we have a likely chance after a new high we're gonna push up again. So that is a second way of entering a trade in a trend, which is a pullback entry. The third way, it is aggressive entry from the zone that I've just mentioned right here, which is what? A pullback to the zone, anywhere in the zone, followed by bullish engulfer or double bottom entry pattern. Once we have that, that is an aggressive entry from the zone, less aggressive entry from the double bottom area. These are the entries now I'll be looking at. You see how nicely we've been taking our trades with conditions, with these type of entries that I've been talking about. And you see, with patience, every time when our entry happens, we have a successful trade and we make money. We are not getting panic that why the price is pushing so slow. Oh, I'm so frustrated, it is not giving us a signal. But eventually, if you are someone who's so panic or just want to be in the trade, let's say you entered sell trade somewhere here and then the price push up, formed an entry here after a couple of weeks, then you'll be cursing yourself that why you didn't wait for here, and that would be a profit instead of a loss. So that is why wait for conditions to form before you enter your trade. So these are 3 conditions now I'll be looking at for my entries here on this platform. Now the zone above, which we are now looking at for a possible pullbacks, just a pullback, a good pullback before the price will push up, which is 2.461 that goes to 2.558. A zone, once the price hit this zone, we can get a possible bearish engulfers or double top. We're going to go for a little scalp. That is enough to hit your targets before the price will push up and shoot up to the next major resistance. So that's what I'm looking at. Have these zones. Once the zone is broken, I'm going to mark these zones again and I will inform you what is the accurate zone above here. So keep an eye and have these zones ready on your charts for your next possible moves. Now here on Owanda. Now zone below, which is recently broken, I have just redone the zone in case you're wondering, 1.868 that goes to 1.958. So exactly the same on 4-hour time frame. Aggressive entry, something like this, and same rules for the pullback to 50 EMA. And then you take profit 1.618 retracement, or pullback with a bullish engulfer, or a pullback in this zone followed by bullish engulfers or double bottom entry pattern. That is what I'll be looking at from this area. Now this area is broken recently, so going to turn this color to green as we're going to use this as a support zone. Here on NEMEX, exactly the same condition I've just mentioned. Our green zone is 1.943 that goes to 2.095. Now let me give you the zone above first as well here on Owanda. The minor zone here on Owanda, it is 2.381 that goes up to 2.538. It is a zone, a minor zone. Then we have a major zone above, which I'm going to redo once this zone is broken. So have these zones ready and look for all 3 entry conditions I have just mentioned for aggressive, for non-aggressive, and for double bottoms and aggressive entries. Here on NEMEX, the zone that has been broken, it is right here, the number you see in blue, and then your Fibonacci entry will look something like this. Now very important to see how the market opens. If it opens above somewhere, then it will become invalid. In that case, let's say we have one more candle above somewhere here. In that case, I will pull up a Fibonacci tool like this. So whenever we get a green candle and we start to see a pullback, we will not move our Fibonacci tool. So something like this, aggressive entry, 50% retracement, and then a push up. And the minor zone above, which is 2.384, that goes to 2.505, a minor zone. Then we have a major zone above, which I'm going to mark once the zone is broken. So have the zones marked on your charts. Make it yellow because it's my minor zone. Actually, it's orange. So look for these entries and have these zones on your chart. We are only looking for bullish trades. Now we are broken above 50 EMA, 20 EMA, nice gap between 50 and 20 EMA, broken above the zone, or we are looking at pullback entry or aggressive entries or double bottoms from the zone that has been broken. So wait for the conditions. Once the condition forms, we are good to go for our trades. Next, we have gold. It's still pushing down, looking at the anchor level right here, 2266, 2260, that goes up to 2272, from where we can get a possible bounce, then hit a 50 EMA, and then a possible fall to this zone. So only looking for bearish trades as long as we are below 50 and 20 EMA. We do not have any valid signals yet on gold. What I want to see, a break below this zone, below this low, and a close as well, then a pullback, then a bearish trade, and keep on going short. So only looking for sell trades and expect some bounce from here because it is a minor area of value from where we can expect some bounce and then a push down. Buy trades will be only once we are completely broken above 50 EMA with a dramatic push up, or the zone below, which is quite lower, from where we're going to enter our buy trade. So keep an eye, not looking for any buy trades, just looking for sell opportunities with a pullback followed by bearish engulfing pattern. Here on silver. Now, if you remember, I've said that I'll be looking a 1 ATR bounce exactly from the close. Right here, the price pushed up 1 ATR, which is 30 cents. If you hover over this candle, it is 30 cents in the ATR. So that was a little buy scalp, not a very big trade. But here on this platform, I will mark my double bottom rejection zone, something like this. Now, if the price pulls back down, forms a bullish engulfer or a 382 candle without a candle to close below this low, in that case we will have a valid buy signal. If we have no condition here and price broke below this low, I will still look at this zone for my possible bullish engulfers or double bottom entry conditions. These are the conditions now I'll be looking at here on silver. A zone which is right here, 25.57, that goes up to 26.34, a zone from where I want to see a possible bounce out of with conditions only. Finally, and last one, we have crude oil is now in the zone, a buying zone 78.06, that goes up to 79.97. Now, first we have an aggressive double bottom, which is push down, push up, and 382 candle. That wouldn't have been played out. So that was aggressive. That is why I call it aggressive double bottom. Now, we are still in a buying zone and If we have a next candle as a bullish engulfer, that will be a strong buy signal looking at the overbought situation. Or if we have a double bottom in this area, within this area, in that case, I'm going to go long using 1 ATR, or you can go 1.2 to 1, 4 to 1. That's totally up to you how you want to manage it, or it can still bounce up to 20 or 50 EMA easily once we have a condition to buy. So that's it. I'm looking at crude oil. Once we have a condition, we are good to go for our trade. So that's it for commodities, guys. Hope you got a value. I know that's a long video, and if you have made it to the end, trust me, you are a legend. Hit a like button for me. It really helps me in a YouTube algorithm. Hope you trade green. I'll see you guys in the next video. Have an awesome weekend. Take care.